Karim Rahimtullah claims to know a backdoor way to buy gold under $20 an ounce. He believes you can collect gains over 4,000% with the stock he's pitching. In this video, we're going to investigate the clues in this presentation to figure out the stock so you don't have to buy Karim's newsletter to learn the stock. Also, no paid or proprietary information is being given away in this video. Read the fair use disclaimer in the description to learn more. Let's look at the performance of the last 5 stocks Karim has done presentations for and see how they've done. He recommended Rolls-Royce back in March 2022, and this is a stock I bought around the same time. It's done extremely well since then and has been an excellent stock pick. Also, in March 2022, Karim recommended buying Blink Charging, calling it the best small cap stock play for 2022. This was a popular stock to pitch back in 2022, but it's done horribly and has crashed completely. In June 2023, Karim recommended Ultra Clean Holdings, claiming it could gain over 500%. That hasn't happened yet, and the stock is about the same price as it was back in June 2023. In June 2023, Karim once again recommended Rolls-Royce and Blink Charging. Rolls-Royce was still an excellent pick and Blink Charging was still a horrible one. In November 2023, Karim recommended Carrier Global, and the stock has done pretty well so far. It's probably around the gains of the market, but probably lagging a little. Let's shift back to Karim's newest teaser and try to figure out the stock now. He starts the presentation off by saying the following. This is 1 ounce of 24K gold. Right now, this ounce trades for around $2,500. But today, I'm sharing a backdoor way you can invest in gold. For under $20 an ounce. Of course, that sounds absurd. Obviously, you can't go out and buy an ounce of gold for $20. So I'm sure you're wondering what the catch is already. But that's the beauty of what you are about to hear. When I reveal how you do this, I'm certain you will come to believe it is the single greatest gold investment you've ever seen. If you want to make money on gold's big bull run, there is no better path. Karim claims big names like Michael Burry of The Big Short and Stanley Druckenmiller are rushing into gold right now. This is also true for billionaire David Einhorn, and Goldman Sachs said they expect gold to continue to rise in price. But Karim isn't recommending buying gold bars or anything like that. Instead, he says he's found an unusual gold investment with far more upside potential. It's an unusual stock that gives you exposure to over more than an ounce of gold for under $20. It's, without a doubt, the most compelling gold investment I've seen in over 20 years. One that positions you for extreme upside profit potential for a fraction of the cost. Historically, this single investment has returned 10 times more than gold. And according to Karim, history proves gold is about to skyrocket. He says, in the late 3rd and early 4th centuries, the Roman Emperor Diocletian debased Roman coinage to finance needless government spending far more than collected taxes. Sound familiar? The result was rampant inflation. And over the next 35 years, gold soared 40,000%. History will tell you runaway inflation is not a new thing. Later on in the presentation, Karim drops his first clue about the stock he's pitching and shows a chart of when it gained 775% over a 2-year period from 2006 to 2008. Karim drops another clue showing that his special gold play has returned over 8,000% since 1999. Next, Karim starts talking about what makes his gold investment so special, and he says, the gold investment I want to tell you about is publicly traded. You can purchase it in a normal brokerage account, but it is very different than most gold investments. Even at under $20, this publicly traded investment gives you a stake in more than an ounce of gold, currently worth around $2,500. And it has radically outperformed all other gold plays, including all other gold mining stocks. You see, the unfortunate truth is that most gold miners out there do not outperform gold. I'll say it again. They don't outperform gold. Since 1999, gold has returned 678%. However, miners have far underperformed gold. Newmont has returned 166%. Barrick just 20%. AngloGold, negative 1%. Karim continues by saying, how can that be possible? Because most gold miners simply issue too many shares. If you look at the share counts of the major companies, they keep growing and growing. The share counts at Newmont, Barrick, and Kinross have more than doubled, but they aren't backing those shares with more gold. Take Barrick, for example. Back in 2007, they had 8 million ounces of gold production. Today, they have 4 million ounces. Yet, they've doubled their share count. That's why you get very little exposure to actual gold when you buy these companies. If you buy a share of Newmont, the world's largest gold company, you're only getting exposure to under 0.25 ounces of gold. It's the same with Agnico Eagle, Anglo Gold, and most of the gold stocks out there. But Karim says his gold investment is different. He says, this company is completely different from all the other gold companies out there in the world. For one, instead of diluting shares, it ties the shares to the amount of gold reserves they have in the ground. So for every share of this company's stock you buy, it represents more than 1 ounce of gold in their reserves. And then Karim says, and it gets even better. If you add in their inferred gold reserves, which means the estimated additional gold based on geological sampling, their gold per share figure shoots to over 2 ounces a share. The company has 8 times more gold in reserves than Newmont, 12 times more than Barrick Gold, and a stunning 20 times more gold than Kinross. And Karim finishes this thought by saying, this means that when you buy shares, the amount of gold in the ground for every share you own gets bigger over time. That's why it's the one gold stock that just keeps going up. They actually care about their shareholders and reward them handsomely. If you believe gold is going higher in the coming months and years like I do, then this is the number one gold stock to buy. And finally, Karim says this company is sitting on the largest undeveloped gold project in the world and the third largest copper project in the world. I'm going to reveal my guess for the stock in about 20 seconds. But before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. Based on the clues, the stock being pitched here is Seabridge Gold and the ticker is SA. Seabridge Gold is a Canadian gold exploration and development company focused on acquiring and advancing large-scale gold projects in North America. The company is best known for its Care Sulphuret's Mitchell project in British Columbia, one of the world's largest undeveloped gold-copper deposits. Here's what you need to know about this stock, and after I'll tell you if I'd buy. First is the king of undeveloped gold. Seabridge owns the KSM project, the world's largest undeveloped gold resource, with over 47 million ounces of proven and probable gold reserves. This massive potential could make it a takeover target for big miners, or a gold mine for patient investors. Second is copper cash cow in disguise. Beyond gold, KSM holds 7.3 billion pounds of copper, giving Seabridge dual metal exposure. Rising copper demand, think green energy, could supercharge its value, but it's a double-edged sword if metal prices tank. Third is no revenue, no problem yet. Seabridge isn't producing anything. It's a development stage company focused on exploration and engineering. That means zero cash flow today, so you're betting on future success, not current profits. Fourth is shareholder leverage dreams. The company's strategy is to grow gold ounces per share faster than shares outstanding, boasting a 7,000% stock rise since inception versus gold's 600%. It's a leveraged play on gold prices, but dilution risks lurk if funding needs spike. Fifth is permits in pocket. KSM has environmental approvals from British Columbia and Canada since 2014, a rare feat that reduces regulatory headaches. Still, a recent legal challenge from a local indigenous group could stir up delays. Sixth is big project, bigger price tag. Building KSM could cost over $5.5 billion, a hefty sum Seabridge can't fund alone. They're hunting for a major partner, but if no one bites, the project and your investment could stall. Seventh is Canada, safe haven or slow lane. Seabridge's projects are all in Canada, a stable mining jurisdiction with low political risk. But strict regulations and long timelines might test your patience as an investor. Eighth is stock volatility alert. Seabridge's stock swings wildly with gold prices and project updates, up over 100% in some years, down big in others. Buckle up for a roller coaster ride. Ninth is buyout bait or bust. With its massive reserves, Seabridge is a juicy target for giants like Newmont or Barrick, potentially delivering a fat payday. But if gold prices slump or partners pass, it could languish as a speculative bet. So I personally think this stock is a buy, but this comes with a caveat. Pre-revenue mining projects are always a big gamble. There's a lot that can go wrong with a project that needs over $5 billion to get developed. These types of projects are ripe for setbacks and disappointment. But the KSM project has a ton of potential with massive gold and copper reserves. It's also located in Canada, which may come with some issues but is governed by a stable government. This isn't a mine in an unstable country in Africa or South America. Plus, they have the permits needed to develop the mine. You just have to be able to stomach volatility and commit to holding the stock for years if you're interested. There might be years where the stock surges fast and drops fast, but in the long run, this seems like a good gamble in my opinion. And make sure to click the link in the description to check out Alpha Picks. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out Alpha Picks now and put yourself in the best position to win with stocks.